Howdy, everyone. This is Tyler Coates with alphanalysis, and it is about 5 o'clock in the Mountain Standard Time, and I am excited to take a look at some charts today after we have seen some volatility, and did have a have a special guest plan for today's show, Mark Wood, and he's been having some technical difficulties, struggling with getting onto Zoom. So hopefully he is able to get that loaded up. It sounds like he thinks it should just be a few more minutes here, but I figured I would go ahead and go live here and dive into my analysis, and hope that he is able to join us before I'm done here, as I will be definitely interested to talk with him and see what he's seeing. He's somebody who is always full of good charts. So with that being said, I'll just go ahead and take a look at, some of the stuff that I have been looking at here. All right. Make sure I keep an eye on the chat so that I don't miss if Mark joins. All righty, here we are. And make sure that the screens are loaded up good here. All right, now I've got what I need, and seeing a cool background here that relates to my t-shirt, so I figure I'd go ahead and share that. Pretty neat background to look down at. And then here is the shirt that I got today. It's a new shirt that I really like a lot. It is, I'm not sure if you can see, but the original pyramid scheme, like that. So I like that guy a lot. And all right, here we are looking at some charts here real quick. Let's go ahead and just motor through the daily process so that we can go ahead and get that out of the way before Mark joins us. Hope everybody's doing well today. We have definitely seen some volatility in the markets, and that is a time where, you know, a lot of money can be made and or lost. And if you're not making it, hopefully you're kind of staying on the sidelines, as sometimes not losing it is almost as good as making it. All right. Going on the chat, so keeping an eye for Mark. And we got this, usually this on the right side. Let's see, maybe this will use a different part of my brain, and maybe that'll be good. All right, support's going to be 46,400 on the daily. Resistance is going to be 51,641 to 5,200. Stop. Now we would be looking at the sell side, not looking at shorting, but definitely looking at taking profit on spot exposure. And when I'm looking at a stop for that, it's looking at where would I want to re-enter, where would I be, really not expecting this to get through without me needing to go ahead and buy back in a little bit more expensive, and that would be this high here, 58,352. All right, definitely been watching this thing like a hawk all day as we broke down the buoy. We tried to support it here, and we firmly broke it down with that candle there. And since then, have been cleanly resisting it. So something to keep an eye on, especially as this approaches overbought territory. Okay, 5,200. So looking at the bottom of the beach here. Sky encroaching pretty quickly. Buoy being tested. Looks like it's rejecting. And underworld here will be a critical level of support. I'll be looking at the bottom here. That breaks down, that would change the 1 hour trend. 160. I'm gonna make sure that my sound is on. Not seeing a bunch of comments. That's good. Shout out to Bob Bennett. You know it was the aliens. I mean, that's pretty much the only thing that makes sense. I would agree. All right. On this, as we have crossed bullish on that 4 hour EXA, as we're testing the beach, something I pay very close attention to. This is originally kind of developed as a tool to confirm entries on the beach, where we are testing the beach, and below here with this oscillator that's based on the distance from the moving average, then it kind of confirms the buy. And it's evolved into using a bit more than that, but just kind of going back, try to find the last time we were down in here and testing the beach. Kind of right here looks pretty darn similar. Yeah, let's go ahead and blow up that screen. And this nice move up, and then the sharp sell off. Let's see what we got. That was like a 27% sell off, top to bottom. This one, 23. And with that confirming, so that is definitely a a good signal that I would be taking if I wasn't still focused on selling some spots. In the last episode, I was kind of outlining a sell zone that didn't get tested, which left me kind of selling some smaller amounts as we were moving through here. And now I am, having some sell orders set, as we can take a look here and see right here. And I'm not really wanting, I'm definitely not wanting to be, exposing more risk to the long side when I'm still wanting to exit, when I'm still wanting to sell some spot, take some profit, not short. All right, still haven't seen an update from Mark. Hopefully he is figure something out, as I know a lot of people are excited to hear from him. Sometimes it's just the way that she goes, is the times you want things to work is when it tends not to sometimes. All right, so let's go ahead and take a look at the 4 hour emasar. And support, looking for 50 EMA test. This green is the 50 EMA. now the 4-hour sky is starting to kind of roll over. We were looking at this 1-hour sky being rolled over, while the 4-hour was still kind of, going up and or sideways. Now that's starting to roll over. It should be a very significant level of resistance. 682. Okey-dokey. Testing the buy zone here. So very possible that I miss out on a good long entry here on the weekly, but I am more than okay with that just based on how exposed I am to Bitcoin with my overall net worth after this run up that we've had. I am needing to focus on, profit taking at these prices, opposed to, and if I miss a good long signal, then that's just how it will happen, and that'll be fine. Kind of when we were looking at yesterday, as I was getting stopped out, it was that first major sign to me to sit up in my seat and be very, very careful about the exposure that I am still holding. So now that we have, continued to kind of push down into this, opposed to really popping up, it's making me feel more that way instead of less. Right. So we will see what happens here. I still very much do want to bounce, as I am layered with some sell orders up in here. I'm just not looking to buy due to the overall exposure that I have. Okey-dokey. Hey, 57930. Stop. Same situation. Just looking for if we make new highs, then that changes everything for me. 481. If I'm able to sell at like 52, 53, and I end up missing out on a move to like 60, and I have to buy back in there, I will be thrilled to do so, as that would be the best possibility. I'm certainly not selling everything. I'm just really looking at rebalancing. Anybody that's been holding Bitcoin through this year, if you were looking at back in here having 30% of your net worth exposed to Bitcoin, well, now that's probably like 60, 70%. And that is a situation where it may be time to consider rebalancing. As I'm zooming out here, I'm reminding myself of a chart I wanted to look at. Definitely seeing a nice parabola here. So we'll be keeping a very close eye on some sort of throwback to prior horizontal resistance, which may line up with some sort of parabolic support. Well, something to keep an eye on there. Sell signal. Signal. 0.05% funding with 5,400 minus 4,7,100 divided by 4,7,100, 7% premium, over 2 times what I would expect to see as the normalized, and this is much more important to me than the funding. That is a very big deal. In yesterday's stream here, let's take a look. After finishing, I realized that I'd made a mistake about an hour after finishing up. I realized I'd mentioned that 60% of my account was exposed to Bitcoin, and that was actually incorrect. It was 60% was exposed to USD. I was just misreading it, with 30% exposed to Bitcoin, with target USD exposure being 70 to 80%. And now I am very close to that 80%. Getting close to that 70%. Definitely not above 70, but getting close to that target USD exposures. I really do not like selling as the price goes down. I've talked about this on like kind of the first couple episodes, as maybe the price is moving up and I was selling and talking about how this is excellent. If we move up and I get filled on taking profit and keep moving up, it's, that's exactly what I want. This is, for me, what a good trade looks like. Whereas where I get in trouble is when I consistently miss profit take orders. So what was my target up here? 58.5, and what was the high? 58.352. So right there, that puts me behind the 8 ball when I'm, looking for, some nice trims to get filled, and we pull up just shy. And in this area, it could very easily just kind of be a little bit of a balk before moving back up, and get me a good fill. You really, you don't want to be too anxious with just chasing the price down. And when it reverses in just a few candles like this, I'm always going to miss it. I'm never going to, I'm just always going to miss it, basically. And, when I'm missing this trim by a few dollars and then wondering on these candles if I am, still maybe going to get filled, and then going to bed and waking up, getting stopped out on these candles, and then lining out a sell zone. I did get a little fill here, but not much at all. I was really looking to get some good fill up in here. So again, I am finding myself behind the 8 ball, and now it's a point where I'm ready to kind of start selling as the price is moving down, which is something I really do not like doing, so much so that even when I do it, it's generally for very small amounts, because in my experience, when I'm the type that likes to buy dips and then sell rallies, and that's in an ideal world, and sometimes that's not what happens. And generally, when I sell as the price is moving down, I'll sell and it'll immediately bounce. So when I find myself in that situation, what I'll generally do is just kind of peace out a little bit, and if it doesn't immediately go in that other direction, then maybe I'll piece a little more. But as it keeps going down, I get less and less incentivized to sell. So that this has definitely been a tricky spot for me. Looks like Mark Wood was just able to hop on, so that'll be great. I'll just go ahead and finish up this thought here, in that this is the tricky situation that I need to stay on guard. Constantly miss getting fills, opposed to the price filling me in profit and then continuing to move where I still have exposure on the table. That's what I want. This is where it can be really tricky, and you really, for me, I just really have to be very, very careful not to get over anxious with selling, and also not to get over picky with the prices that I want. So let's go ahead and stop the screen share. Let Mark in. Looks like we've got a couple of people trying to get admitted. Let's try MW. Hello. Hello. Anybody able to hear me? There he is. How's it going, Mark? I don't think I'm hearing anything from your end. You able to hear me? I'm not getting any audio, no.
Now?
Yep, can hear you now.
Remember our conversation about Macs versus PC?
I do, yes.
Man, I'm eating some crow right here.
Well, we'll welcome you to the light side anytime you want.
Man, I fear change. I don't know if I can adapt.
As we all do. I'm still adapting myself. I still got the Mac here in the background. It's a slow process, but it's one that I feel like the further we put off, the worse stuff that we end up buying for more money.
What did I miss? Is Bitcoin dead?
Yep, just about. A couple more dollars and it's going straight to zero. So it's a good thing that you joined, because we were really starting to worry.
Well, I'm happy to be here, man. It's great to join you on the channel, on the show, and hang out.
Thanks a lot for joining. This will be great. I'll definitely be interested to see some of the charts that you've got to look at, as you've always got some good ones for us. And just to give a little background, Mark is somebody that I met in the original Hyperwave workshop out at Las Vegas for Unconfiscatable, actually the first Unconfiscatable as well. And Mark was sitting right in front of me, and we got to know each other from there. And since then, he became one of the predominant posters in the Hyperwave chat group, and he's often around in Tone's Telegram group as well. And anybody that's in my Telegram group has definitely become familiar with Mark as well. So it's definitely great to get the chance to share some of your charts with maybe some of the people that haven't gotten to know you yet.
Yeah, I remember that event. I got to take Tone's sequential class, which was fantastic and life-changing. And of course, you did an incredible job helping Tyler and Leah put together the Hyperwave, and how lucky were we to be able to be there live in person while Tyler showed us his wizardry over his decades of experience.
Oh, that was pretty special. Certainly something that I'm sure neither of us will ever forget. So maybe that would be a good place to go ahead and transition. Throughout this run up, I have been really trying to look at the Hyperwave from a lot of angles, and each angle I look at it, it's just I'm not liking it. What do you think? Is Bitcoin currently in a hyperwave, whether it be a fractal or one on the weekly?
I think that it. See, I don't know. I mean, we could look at what 11K, 11.8 as a phase one. Have you thought about that?
Yeah, I guess I would have mine right around 14. So I'll go ahead and share a screen just so people can kind of get a feel for what we're looking at here. Let me see if I can find a fresh chart about a Bitstamp. Yeah, okie dokie. So if I'm to look at it on the weekly, the phase one is the one thing that I really like, which really has me kind of looking at it from a lot of angles and making me really wanting to find something there. So this, I think this is 14. Yeah, you're 12, right, a lot closer to 12. So initially I was putting it together like this.
Mm-hmm.
And when this failed to revisit here, it really gave me a problem, because it's like, I mean, that would be just such a weak phase two. And now what is this, the phase four? I don't know. It's at the point where I just think that maybe a hyperwave isn't the best fit. I was just taking a look at before sending it over to you, is this parabola that we are, I think, is for me, gun to my head, this is the market structure that we are in. As Tyler talked about, all hyperwaves are bubbles, but not all bubbles are hyperwaves. And this could potentially just be a more traditional parabolic bubble. What do you think?
Yeah, I agree. In fact, one of the things I'll show, I've shared in the channel, in your channel, and a couple of other channels, is just this the log growth curve. And what it's showing me is that it's just doing normal post-halving moves, but not hyperwave moves. The hyperwave was building through the first halving into the second halving. That's what created the hyperwave. I even think there was a hyperwave really early on, leading to the 1200. I actually think that there's enough information there that would be very close to being considered a hyperwave, going back to maybe phase two, maybe not a phase one.
Well, could you pull that up on a chart just so I can picture what you're talking about?
Yeah. So where can I do screen share from the Zoom?
There's a big green button in the middle bottom of your mouse.
Okay, so can you see it? Can you see me?
Yep.
All right, so let me get rid of some of this stuff. I see where is it from? Let me get rid of these MAs. So I believe it was from maybe from here, right here, like this initial top right here. If I kind of just run this to right here, down there, it's not you know, it's not your traditional line, but I see a phase 2, a phase 3, and then a drop, and then here, but it doesn't go back to phase 1. It actually picks up a trend line. Oh, here's the other issue. This is why it's not looking right, because I'm on log. And which is a point I actually wanted to bring up to you and ask you a question. Tyler always drew on linear. Hyperwaves were always on linear, right?
Mm-hmm.
So we get some very different information from linear trend lines and log scale trend lines. They can look completely different, right? So this will look a little bit better now that I'm on linear. Right here, all of this right here, phase 1.
Yeah.
Right there.
I guess
Right.
what I'm more interested in is the current price action. We spent a lot of time covering the old one. What do you think about the current price action?
The current one, I mean, so we can kind of do a similar thing, like going back here, where this would be phase 1 right here, right? Maybe from 12,000, but none of this fits phase 2. None of it. I don't think it's a hyperwave. I actually think that it's just it's falling perfectly within the parameters of the other breakouts after the halvings in the log curve scale. So like
yeah. So I agree that I'm not seeing this as a hyperwave, and I was just curious if that was your opinion. So go ahead and get into some of the other charts that you got for us.
Yeah. So let me show you what I do. At the end of every week, I go to this weekly support. I just review the weekly support with a few MAs, the orange, and so I'm gonna shift this now because the week closed and everything that stayed about the same. 21 stayed about the same. Everything stayed about the same. So in past market cycles, this one is acting a little bit differently, because in past market cycles, the 21 EMA and the middle Bollinger Band has caught the 30-40% drops, and we just haven't seen that yet since 8,000, 11,000 area. So for now, the 9 EMA, the 13 EMA is not really relevant. It catches wicks, but it's not super relevant. The yellow 21, very relevant. The middle Bollinger Band, which is the same as the 20 simple moving average on weekly in the past cycles. So if I get rid of if I get rid of the 9 and okay, if I just get rid of okay, here we go. So if I get rid of the 9 and we go back to 2017, get rid of that. So I believe that the bull market started. I believe it confirmed right around here. Okay. And I'll show you why. Because one of the things that I look for is after a bottom, after this long bear market bottom, I look for price to start picking up the Bollinger Band and the 21 EME right here. We had, this was really close, but we still fell back through and then picked it up right here. So now this is the confirmation though. Once it gets above, has a nice run and comes back and tests and holds. See all these wicks right here?
Yep.
And right there. But if you notice, every single week held a close above that. Every single week, all the way until we got our first close up here. Okay. So I believe I have a clean Bollinger Band chart right here. So here it is with the Bollinger Bands. You get that first little peak up, and you touch the top Bollinger Band, and then you want the middle band to hold on the first test. If that doesn't hold, then you're going to have a little bit more downside. So here it is right here. Pick it up, 21 EMA, middle Bollinger Band, nice run, and then right here, that's confirmation. The middle band gets tested and it holds the closes, and off we go. So in 2014, at 14K, we had the same thing. We picked up the middle Bollinger Band right here. I start to get really bullish. I get bullish like here, but when I see this happen, you trade sideways into the moving average and you get a rocket ship up. That's just confirmation that this moving average is holding as support. But what happened was the very first time that these got tested, it fell back through. And that's why the bull market didn't hold through there. So I'll show you when I got super bullish in on this run. Here's the COVID capitulation right here. And then price just kept going back as fast as it could to get back into this structure, because it was trying to form bullish structure in here, right here, and then right here. That was confirmation. These 1, 2, 3, 4, 5, 6 weeks right there. When you made a run to the top Bollinger Band and then came back and hold the middle one, confirmation bull market is on. And at that point, my bias stays to the upside until we lose that weekly support, which goes back to Tyler Jenks. Like, one of the things I learned from Tyler is patience. Be patient and don't panic when price is dropping through the floor and also busting through the ceiling. The closes of whatever time frame that you're watching are way more important than what's happening at the current time, right? So I'm always watching higher time frame closes before I make any really big decisions about where I think price is going on, or I think the market is headed, right? So right now, I'm still actually kind of bullish, except there are a couple of things I do not like.
Was I understanding that right, that you will stay bullish as long as the EMA is above the middle Bollinger Band? Bollinger Band EMA?
Yeah. So
you've got quite a ways to remain bullish, down to, what is it, like probably 25 or so?
Yeah, 27. I mean, it sounds crazy, but what I'm not liking is this. See this nice green candle to the parabolic top, and then the following week closed bearish engulfing, basically right here, right?
Yeah.
And we have a very similar structure right here. So this is telling you
a lot of time. I mean, still 5 days or so till the close.
Exactly. But I'll show you this. This is another thing I did not like. So going to the 3-day, this is what 20K looked like. So one of the things we had this conversation the other night. When you get a close above the top Bollinger Band, your bias has to remain to the upside. And it's not 100%, you're just playing the percentages, okay? So I see this, I'm staying bullish, and I'm looking for a new high. It doesn't come for a couple of weeks, but we do get the new high. Then what I look for is a red candle close below the top band. And when you get that, things get a little bit dicey, right? So right up here, this was a bullish close. This was like I would have been considering looking for continuation here, especially since it was, there might have been a risk line up here. Why is that not working? So, but notice here how this candle closed red below the top band.
Yep.
That's a warning sign right here. Okay. We got something similar. My page is freezing up.
But what we're seeing right now with the current engulfing candle, if it is even getting some rebound from here, could still be in danger of closing inside of the top Bollinger Band.
Well, this last 3-day did, and let me see. I don't know why I'm having issues with this refreshing. This last one, come on. Do I have anything, Bueller?
I could go ahead and pull it up on my screen, and you could share what you're seeing. Then,
yeah.
As it is now approaching the hour, we will want to wrap it up here. But let's take a look at it was actually the 3-day that you were looking at. I was thinking it was the weekly, and now
I was initially looking at the weekly, but actually it was the 3-day. It was the 3-day close that I was watching the most close today.
All right, so it was this one that just closed today, well inside of not only engulfing 3-day, but also well below the top Bollinger Band. That's one thing that's got you concerned. Yes,
and also here, let me get back on here. I'm having issues, but this is a really important chart right here. So this 3-day chart has been my guide ever since at probably about 35.5K. This indicator right here is it's an oscillator.
I'm not seeing you.
You're not seeing?
I'm seeing a black screen now.
Hold on.
Let's see.
What do you see now?
I'm still just seeing a black screen. It says that you're sharing, but it's just black. I'm looking at, okay, now I see it.
Okay. Okay, so this chart right here, I can put the Bollinger Band on. So see how this candle right here, this was bullish. This was a bullish close right here. Green candle above. We did get a new high. It was small, but we got a new high. But this, so this candle right here also closed red inside of the band, and we got the 30% correction. I'm kind of thinking that's what's on the horizon right now. I don't know what you were saying earlier, but right here we got the same setup. We got a red candle below the band, and then I'm also looking at these oscillators. This is called iFish Smooth, created by Momentum, who's on Twitter and TradingView. Check him out. His indicators are unbelievable. And it matches up perfectly with the stochastics that I follow. And we got a cross down right here. So what I'm thinking we're going to see, so check this out though. Every time these stochastics cross up, and especially when it marries up with the iFish, we've got a 90% move, a 37% move, 83% move, 120% move, and now we've got a 68% move. So you can count on a pretty legit move playing out for a couple of weeks, I would say, when you get that. But now we've got the stochastics turning down confirmed on this candle close. So that's when I start looking at the 9 EMA. I still remain stubbornly bullish. See how price is wicking off of the 9 right there? Yep. That's a bullish sign still. So we could consolidate right here, along here, long enough to have sequential turnaround and send price back up here. However, losing this right here, losing 46.7, I'm starting to look down at 40K. I'm starting to look at the Bollinger Band, which takes price right to the 9 on weekly. So if we look, ever since right here, September, the 9 has been support. These wicks right off of here, off the 9, super bullish, even though it was a strong drop. So if this closes bearish this week, I think there's a really strong chance 40K gets hit. I think that 9 is going to get tested. Right?
All right. Well, yeah, that definitely makes sense. So I guess to wrap it up, if you don't mind sharing it, and if you do, then that's quite all right. Is this a spot where you're looking to buy on the 9 EMA, or are you targeting the Bollinger Band MA? What are you looking to do here?
Yeah, well, I was watching emasar. What I missed the beginning of your thing. Did you buy the beach here, or did you stay out?
I stayed away, and I'm mostly looking to still just kind of scale out. So I am having some sell orders set from about 51 to 53, and just kind of doing my best to stay on top of that in case we don't get there. And if we do blow right through, then that wouldn't surprise me at all.
So would you consider buying? See this little area here where I've got these MAs in the about 52,000? We've got this resistance right here. Is that not a large enough move for you to consider buying, getting a decent bounce off of the beach here?
Yeah, for sure. It's just a situation where if I'm really focusing on scaling out, I can't be buying, or else it just screws me all up. Because if then the buy goes against, and I'm still having stuff that I'm wanting to scale out, I'm fully behind the market, opposed to if I did get fully filled on my sells, which I had it like 56 to 57 right before this move. I barely missed it. If that did get filled, I'd be definitely buying this and looking for that bounce.
So you're basically in sell the rally mode.
Yep, yep. Looking to take profit. Definitely
I
not looking to short, but very attracted to taking profit at these prices.
Yeah, I'm kind of looking for a bounce to a lower high and then another move down. That's based on those 2 and 3 day candle closes that I'm seeing. I'm not quite as bullish as I was at the end of last week. I was expecting something different. Before we like call it a day, let me show you this. This is where I think where we are headed. Well, first of all, I'm feeling pretty confident. I could be completely wrong on this, but I'm feeling pretty confident that from this area, price could kind of wander around here. It might come down and find these moving averages as they climb up. Once that resets, like March, April, I think it's going to be ready to go test the top of the log curve. The only way that fails is if the yellow is if 31, it's right at 31,000 right now. If 30K fails, we're probably going to see some pretty strong corrections, right? So if we look, one of the things I was looking for on this chart was for closes to happen above this middle right here. This was about 35,000 range right here. Once we got 2 weeks closing above that middle band, to me it says that the market is ready to run to the top. Because if we look at 2017, here's the middle band. We got a nice sell-off. Once we started closing prices, weeks right above the middle band, had a sell-off, tested support, boom, right? Now, I think what I'm seeing is so similar to April 2013, where the price almost touched this band right here. I was looking for 62,000. That's where I thought price was going to head this week. I was wrong on that. I thought it was going to go right up here, then maybe after next week meet up with this moving average right here, consolidate, maybe even take 2-3 months to consolidate and then move up. But going back to 2013 right here, we saw the price touch this band and then there was a huge sell-off. But if we look, this was a massive sell-off. This was 75%. I don't think we're going to see 75%. But if you notice, there was only 1 week closed below the 21 EMA. That was it. It was a strong week. That was a huge bear trap right there. And then the next week it was above it. Close above, close above. Once you get 2 weeks closing back above the yellow, you're good to go. And then back to that prior high right here, and then price was at the top of the curve 1, 2, 3 weeks later. So I believe same thing here. So here's the second, this is the second curve above the middle right here. 1, 2, 3. Price was at the top of the curve 3 weeks later. So nothing says that everything has to repeat. This can completely collapse, but I believe that when the time comes that price is closing above this right here, it's going to be at the top in a matter of weeks. And I think that could come July, if it's fast, in the lower 100Ks, or if it takes a little bit longer to work through this and have a larger correction, then maybe at the top of the curve by the end of the year, November, around 140 right here. So the overall cycle to me is still very bullish. I think we're going to see a top similar to right here. And maybe, I mean, the drop could go It could go down to 30,000. Fundamentally, I don't know if that's going to happen. There was just a lot of big buying, 30,000, 35,000, 40,000 right there. So technically, yes, that can happen. And knowing that the yellow caught the drops, 1, 2, 3, 4, 5, 6, 7 times. It hasn't been touched since August. It was the last time price was near the yellow. So it's accelerating kind of to here where I'm only expecting the 9 at this point to catch price. So this is another reason that I think 40,000-ish is an area to look for. That is where I would consider adding to what could be, I mean, from there, you're talking another 175 to 250 percent back to the top. That's a pretty good return off of that weekly support. Does that make any sense, or are you lost in the changes?
Yeah, that definitely makes sense, and that would certainly be a sweet rate of return if we could make it happen. And I'm with you, and would maybe even do one better, that the price has never fallen below that trend support until that COVID capitulation. So now I would be expecting an equal and opposite reaction myself above the log curve trend line. So that's kind of what I would be looking for, is a peak above that, and we're just going to be drawing a trend line on the recent lows to identify a time target, which is right in line with what you are looking at. So definitely, I think a very, very important longer term indicator, and very important now that we are above that median for sure. That's
look. Let's just look at things really simplistically. We need 3. We need 3 for a trend. We've only had 2, so this one is going to define a lot of things for us. But once prices begun to close weeks above the middle band, it's made it to the top. It's only happened twice, but it's made it to the top. And this is a very volatile area. Until you get above here, it is very volatile, and that's where you see 25-35% swings up and down. So to see this price dropping here, I was expecting the potential of, let's say it touched this right around 62, 63. I still think price was going to drop 30%. 50 is a little bit much. 40%, maybe back down to this middle band area right here, before loading back up to run to the top. So I initially had price reaching the top with the idea of an extended, elongated trend hitting the top in December of 2021. But this, like I said before, this is acting just like every other cycle, same time frame. So I'd say summer by end of the year is my timeline for when I would look for price to be back up at the top there. So overall, I'm just bullish until 30K is lost, and then things get a little bit dicey, because
yeah, I hear you, and I agree with you. I think 30 is kind of the new 3, and that there are a lot of very good reasons to be very bullish. And yeah, I certainly appreciate the analysis and all the great charts that you've shared. Unfortunately, I am going to have to get running here.
no problem.
definitely looking at some higher prices by the end of the year, while still being very careful about a big correction in the meantime. And that's very much what I'm looking for, is some sort of multi-month correction before the run up into the end of the year. So it sounds like we're on similar pages, which makes sense because we use such similar indicators, focusing mostly on moving averages, which is why I'm always liking to see the charts that you have to share. So yeah, unfortunately, we're seeing your charts, but we can't see your the video is not working. So maybe if you stop screen share, we could see you, or if you had any last words to share, then
Um,
hear you.
no, I'm good. The next the next time I'd be curious at some point to talk to you about. I know that you don't follow like Bitcoin dominance per se, or Ethereum dominance, or the alt dominance, but I follow those pretty closely, and I think that they can be good clues into where the money is moving around the various markets at various times. And I've been able to use them to tell kind of when the alts are cooling off, and money might start flowing back into Bitcoin to send it back up to another leg up. Do you ever take that into consideration, or it's just not really a factor?
Yeah, I definitely think it's very important to pay attention to what's happening with alts relative to Bitcoin. While I don't necessarily use that to confirm or negate any entry signals that I have, while I basically want to just completely stay away from Ethereum as long as it is not bullish against Bitcoin. And if it is bullish against Bitcoin, then I potentially want to just add a little bit of that to my portfolio. And that's basically my thinking there.
Got it. And then one controversial question I will ask you: do you think that, like, you and I were both very bullish on Bitcoin dominance a while ago? Like, I actually thought it was heading 75, 80, and it got rejected around 75 on this run and dropped quite a bit. And then the altcoins, there's so many altcoins out there still, which is surprising. But I'm still very, very heavy Bitcoin. I do think that there are many projects that could potentially offer some things in the future. But here's a controversial idea I've had. Some of the fantastic alt traders that are out there, I see a lot of them on Twitter that really know what they're doing, and they understand how the money flows through the markets. The moves that can be found, especially when leverage trading on the altcoins, can provide a ton of liquidity that eventually flows back into Bitcoin. So is it better to have that atmosphere, or would it just be better to have the majority of the money being traded in and out of Bitcoin?
It's definitely a good question that I think could be debated in a lot of ways. For my money, if there was only one crypto and it was just Bitcoin and all the market cap was in Bitcoin, that would be best. And that predominantly the leverage trading and the alt trading just causes people to lose their Bitcoin value opposed to putting it back in. So I am, I guess, thinking that I would prefer that there were no alts, and I was very much expecting to see some many go to zero over the 2018 to 2020 bear market. And now that that hasn't happened, I'm definitely having to reconsider. But that being said, with what we've just recently seen on that last sell-off, alts are hitting it harder than Bitcoin, and you just never know. As soon as nobody starts talking about alts dying, then that very well could be when it happens.
Right. Well, I do see potential that dominance pushes, if it's moving above around 64%. There's a really good chance it's going to run higher, and the alts might have a hard time keeping up. But if it's laying below below 60, 64, then I think the alts are still going to have a pretty good time. Let me show you this really quick. I know we got to go, but this is something I've been watching. I've been watching pretty closely. Are you able to see that or not?
Yep.
Okay. So this is a weekly chart on dominance, and you know, there's a pretty nice little triangle forming here, and it's got the top right around 73, 75. I mean, I could adjust this a little bit here and there, but this was a nice W bottom right here. We could be seeing a W bottom right here, which would propel the dominance way into the 70s and the 80s. Or this cluster of moving average resistance right here, I'm concerned about. We could see a head and shoulders, boom, 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 and boom, back down to these lows. So this area right here, where these moving averages are all converging, is a really important area for dominance. And it'll be telling, we'll know within a few weeks what's going to happen. Now, the other thing is this is the dominance of alts minus Ethereum. They're kind of forming the same type move, and they actually have a much more bullish moving average structure. They have all moving averages crossed in a really bullish way. This was the Ripple news effect where alts just completely capitulated, but they got back into this triangle right here. So this is kind of telling me that as Bitcoin strengthens, the alts are still also going to continue to gain some dominance. Right now they're at 10%-ish of the market cap. So if they break out above 12, I think that's when we would see Bitcoin dominance dropping back below 60, something like that. So, you know, they're not going away. I don't think they're going away right now. I think there's still a lot of money to be made and traded in the alts. So I'm watching this pretty closely. I'm watching the relationship between the Bitcoin dominance and the alt dominance and the Ethereum dominance, and seeing some interesting things.
Yeah, I can definitely see why that would be of interest, and that there's a lot of reasons to pay close attention to that. I myself have not been paying attention to the market cap dominance since I don't know, given a lot of thought over the last year or so, and kind of concluding that if new alts are added to the space day after day after day after day, and there's only ever been one Bitcoin, then Bitcoin could just consistently lose market cap dominance while it's actually gaining market cap value relative to everything else. Just if you can create a new project and it gets any market cap, then that's kind of not too fair of a comparison for me, just at least in my conclusion. But I definitely see a lot of good traders keeping a very close eye on that, and certainly see a lot of good reason to focus on that specifically if you are trading a lot of altcoins. So yeah, appreciate you bringing that up, and it's been a great chat with you. You had a bunch of good charts to look at as usual. So I appreciate you being so generous with your time on a day-to-day basis in Telegram, and sharing what you're seeing just consistently. I know that a lot of people get a lot of value out of that, and certainly appreciate your generosity here today.
It's fun as always, and yeah, all y'all check out emasar indicator. It's like, I think it's one of the best, single most all-encompassing, all-inclusive indicators that you can ever come across. You did a brilliant job. I've learned, I use it all the time, every day. It's like a normal part of what I'm watching. So kudos to you for putting out such a ridiculously impressive product there.
Well, thank you so much. That means a lot, and it's been definitely really cool to see you posting a lot of MSR charts and getting some seeing that you're getting some use out of that in your own analysis has been great for me to see as well. And I certainly really appreciate the kind words, as well as you spreading the word around to those that you think would find some use from it. So I wish I could see your smiling mug as I give a goodbye, but it's great that you were able to sort out stuff good enough to get us some charts.
All right, man. Well, I appreciate you having me on, and hopefully we can look at some other stuff later in the future.
All right, sounds good. Cheers.
Later, dude.